Monday afternoon, everybody. Welcome to TraderMerlin show. As I mentioned, it is a Monday afternoon edition. Hope you had a good trading session out there. Certainly the rally continuing for my long positions, which I was excited about today, and my silver back on track. So we had a couple weeks. It wasn't appallingly bad, but not the best trading in the world. And all of a sudden, we came right back, roaring back with some victorious trades. I hope you did well as well. Last week, I finished the weekend edition with Larry Jacobson, kind of talking about cryptocurrency. If you watch the Monday Morning Must-Knows that I did for Online Trading Academy, you know, one of the biggest things happening this week, it's funny, it's not economic data, it's not an earnings announcement, it's not a company split. The biggest thing happening this week is going to be a cryptocurrency event. I know many of you don't care for crypto, and you think it's probably just a passing fad or a scam. And I know we have another side of the contingency here that is, you know, hugely into crypto and believe that it could change the world potentially and is invested in it. So let's straddle that fence today and talk a little bit about preparing for the merge. So for those who might be brand new, I'm going to explain what the merge is. We'll talk about what it means, why it's so important, and maybe how you can potentially profit from it. Now, just so we all know, I know we've got regular viewers here. At the end of the show today, I will go through the overall markets because we had some very nice gainers out there. So we'll talk about that near the end of the show, but I'm going to get to my main topic, which is preparing for the merge. Now, I didn't have time to prepare visuals today, but I want everybody to understand, and I'm sure we've talked about this in the past at length, but in the crypto space, you have really three generations of cryptocurrencies. You have Generation 1, which is Bitcoin. Generation 1 was simply, it's a peer-to-peer payment network. So if I want to send money to Vernon here, good to see you, Vernon. If I want to send money to Vernon, I can do that in the current system that we have today with normal markets, right? I can go to my Chase account, I can use Zelle, I can use PayPal, I can use Venmo, and I can send Vernon money. The problem with that is those are centralized mechanisms. And what I mean by centralized is PayPal, Chase, Zelle, what was the other one? Venmo. They could all instantly cut off my payments and say, nope, we're not going to honor that payment. Or, more importantly, they can prohibit me from making transactions because it's more than a certain amount. So let's say I wanted to send Vernon, it's your lucky day, Vernon. I'm going to send Vernon $100,000 right now from my account. In any financial application that you're going to use, sending $100,000 to somebody is going to create some serious red flags. And they're going to want to know, where's it going? Why are you sending it there? Do you know this person? What's it for? I mean, all these questions, when, let's be honest, it's none of your friggin' business. I want to send Vernon money, which I have. It's my prerogative to send it to him. So that's the current system, has these bottlenecks because of centralization. If we look at what Bitcoin came to be, and started off with this mission of, it was, I apologize for my French today, basically Satoshi Nakamoto, the guy that created it, and his white paper says, screw the banks. Screw the financial institutions. They have too much power. They've been mishandling my money. They're controlling my money. And honestly, they're making money with my money. Why can't I do that all myself? So what Bitcoin allows me to do is if I chose to send Vernon or Mimi or Terry, good to see everybody, any amount of money, I could send $1 quadrillion to any one of you if I had $1 quadrillion, and no one could say no one could question it, etc. So that's what Bitcoin first proposed and said, let's make a peer-to-peer payment system. It's decentralized, there's no real control unit of it, and to me that was just groundbreaking because now we move away from centralization. But there's an inherent problem there. Bitcoin, for all its strengths, has some faults, and its faults are it's very slow. Transactions will take about 10 minutes at a minimum, about 60 minutes as a maximum for a transaction to go through on the Bitcoin network, simply because the way that its architecture is designed. What else is a flaw of it? It uses proof of work, which is a very computer-intensive network consensus algorithm, right? If we don't have one controlling figure that says, hey, Merlin is sending $100,000 to Vernon, well, Richard, you can have some too. If Merlin's going to send $100,000 to Ricardo, then who's controlling the ledger, right? Who's watching Merlin's account and saying, hey, he sent $100,000 to Ricardo, and then who's crediting that account? What was unique about Bitcoin is it created a decentralized ledger where no one entity has a ledger. Everybody has it. And all of you right now, should you want to, you all have the ability in just a couple clicks of a mouse to install a Bitcoin client on any computer running in your house, and you could run a complete Bitcoin node and have every transaction that has ever happened since 2009 on Bitcoin. Every fraction of a Bitcoin that's moved, you know exactly where it went. You may not know the person that it went to, but you know the address that it went to. So that absolutely revolutionary, but that network is called proof of work. It's the way that these computers are operating. It's extremely energy intensive. It uses a thing called an ASIC miner, which is called an application-specific integrated circuit miner. It's a computer that serves one purpose, and one purpose only, and that is to process computations in order to solve a mathematical puzzle. Whoever solves that puzzle first gets to mine the block for Bitcoin and thus be rewarded. Right now, every time a miner solves this puzzle, they get rewarded with 2.5 Bitcoin plus any fees. And, with Bitcoin sitting at $22,000, 2.5 Bitcoin is, $56,000, $57,000. That's a lot of money every 10 minutes. So that's proof of work. That's generation 1, which is Bitcoin. Then you bring on one of my favorite people on the planet, Vitalik Buterin. What is the puzzle? Okay, this is really complex. It's called a hashing algorithm. So the way that Bitcoin works is it uses an encryption algorithm called SHA-256, which is an NSA encryption protocol. And basically what it is, it's a hashing function, which means if you put in a certain amount of data, the output, let's say I take my name, just to put Merlin, and I put it into the encryption algorithm, SHA-256, the output is this incredibly long string of characters. And every time I put in Merlin, it will always be the same. It'll never deviate. It'll always be that. But if I make my M capital versus lowercase, it's a whole different string of characters. That's a hashing algorithm. What the miners are trying to do is there's this output that they're trying to achieve, right? They're trying to say, we're going to change the input to get this output. So what they're doing is they're constantly changing the first, I think it's 5 or 6 digits of this input, and they keep changing them as fast as they can until they get this output. That's the puzzle. Now, I know that sounds really complicated, and it is. It's one of those things that it really doesn't impact us as consumers, but a miner is simply processing as many calculations, they call it hashes, of data as it can, and if they can, the faster they can compute that puzzle and run computations, the better. So whoever has the most equipment solves the most blocks of data. And let me real quickly show you, just to give you an idea. Let's go to btc.com, and I'm going to show you, this is one of the bigger sites out there for blockchain data on Bitcoin. If I go to Explorer, you notice here, you can see the hash rate. There are 234 ectohash, which is an unbelievably large amount of money. An unbelievably large amount of hashing power. That's what I meant to say. Here you have pools. So you have Binance Pool, F2 Pool, Ant Pool. These are all mining farms that are maybe physical locations or also where people can join up to and contribute their hashing power. And if one of these solves, you get a percentage of the earnings. Now, let me see if I can find the last block that came through. That was for Bitcoin. Let's go here. Latest blocks. So you can see right here, I clicked on latest blocks, and they're all numerical, right? It's a chain. Whichever one was solved the most recently is at the top here. I'll make it a little bit bigger for you at home. In that last block of data, which took 10 minutes, there was 4,420 Bitcoin exchange hands. That's a lot of money. Just to put it in perspective for those who might not be quick with math, if you take 4,420 times that by 22,000, which is where we're at right now, it's roughly $97 million. So $97 million change hands in a 10-minute window of time. Notice they also received 5.31 Bitcoin. So the base is the base is 6.25 Bitcoin. So they received 6.25 Bitcoin plus 0.06 in fees that were charged in the Bitcoin network. And that's how miners make their money. So these guys are spending an unbelievable amount of money to mine Bitcoin. And the more equipment they have, the more likely they are going to solve a block of data. So there you go. Hopefully I answered that question a little bit. Tom says, how big is the data set for Bitcoin in gigabytes? I don't know. I haven't looked at my computer, but I have a 2 terabyte drive. I think it's like 100 gigs right now for the whole thing, but I'm not sure on that one to keep track of everything. And that's part of the problem, right? Well, why doesn't Bitcoin go faster than 10 minutes might be your question, right? Why is the block time 10 minutes? Why not make it 60 seconds? Because all those transactions every 10 minutes is data. And the more, if they decided to cut Bitcoin to, let's say, a 5-minute block time, what you have is double the amount of data, right? Because I'm increasing the block time, I'm doubling it. I'm also creating more vulnerability, because the longer time that miners have to verify transactions, the safer it's going to be. If you have a protocol like, let's say, Solana network has a block time of 0.4 seconds. So we go from 10 minutes with Bitcoin to 0.4 seconds for Solana. However, when you're processing transactions that fast, there is a much greater probability of errors happening in the recording of that data, and that is a flaw of those networks. So let's go back. I'm kind of getting a little bit off track. I want to get to the preparing for the merge. Generation 1 was Bitcoin, transactions only. Generation 2 was, to me, one of the smartest men alive today and one of the most brilliant minds, and you would never think it if you saw him in public. You just kind of probably laugh, because he's one of those people that just could care less about what he looks like. And he'll wear the weirdest crap you have ever seen, disheveled hair, but he's a savant. His name is Vitalik Buterin, Vitalik Buterin. He is a whiz kid who, like, as a kid growing up, instead of playing video games, he played with Excel spreadsheets. And he's a coder. He writes code. I think he's in his mid-20s right now. And when he was in his late teens, he created Ethereum. Now, Ethereum takes what Bitcoin created, which is a peer-to-peer payment network, and says, hold on a second. Instead of just doing money transfer, why can't I use that blockchain to store other kinds of data? I could store music. I could store books. I could make smart contracts. And that's what created Ethereum. Ethereum is now what's called Generation 2, which says, let's have a programmable blockchain where I can write code that utilizes the security and safety of Ethereum, but I can run my business on their network. Kind of cool. Essentially what Ethereum is let's just say one of the largest decentralized computers in the world, where anybody can plug into it using the same common tools and access that network. Now, Ethereum is much faster than Bitcoin. Block times are about 15 seconds, okay? But it can only handle about 12 to 15 transactions per second. So even though it's revolutionary and that it allows us to program on this blockchain, it's still relatively slow. Now, what we've experienced over the past 3 years with the boom of ICOs and NFTs, non-fungible tokens, and all these crazy artwork things, is a massive increase in the amount of people wanting to trade these, let's call them commodities. They're digital commodities. And in doing so, it's bogged down the Ethereum network. It's slowed it down, and because of that, the cost to transact on Ethereum is skyrocketed. I mean, the prices are ridiculous. With my students in the Crypto Investor Live program, I was trying to make a transaction where I was trying to buy $100 of mana tokens in a game that I was playing. So it was a $100 transaction, but the fees were $20,000. That's Ethereum's problem. It became so bottlenecked that the cost to use it went through the roof. So Ethereum said, listen, we have a problem. We have to fix this. And because it took them so long to fix this problem, we have Generation 3. So remember, Generation 1 is peer-to-peer payment. Generation 2 is peer-to-peer payment plus I can now write code on top of that blockchain, but it's still slow. It's not scalable. Neither Generation 1 nor Generation 2 are scalable, meaning utilized for the masses. So Generation 3 says, let's make a peer-to-peer payment system. Let's be able to write smart contracts and utilize the blockchain for a variety of different purposes, but let's also make it scalable, meaning thousands of transactions per second. This gave rise to companies like EOS. This gave rise to companies like Cardano and Solana and Avalanche and Algorand and countless others that are trying to do the same thing as Ethereum. Now, because Ethereum is moving so slow, these other ones, you probably would never have heard of them if Ethereum fixed their problems early. But because they're so slow, now all of a sudden Solana and Cardano and Avalanche are all commonplace and very popular. They're eating the lunch of Ethereum because Ethereum's moving too slow. Are we good with that? Right? I've got the basis. Gen 1, Gen 2, Gen 3, and you can see what Ethereum's problem is. It's not scalable. Number 2, it also uses proof of work, which is the same network that that Bitcoin is using. Again, extremely energy intensive. Tons of energy consumption. They're saying it uses, the same amount of energy as small countries just to mine Bitcoin. Well, Ethereum does the same thing. So let's take it one step further. Two issues for Ethereum. Number one, scalability. I need to be able to do more transactions per second to accommodate the sheer demand that is on our network. And number two, if I can, I want to go from proof of stake, or proof of work, which is energy intensive, to proof of stake, which is a different technology. It does not use ASIC miners. It uses what are called validators. And a validator can be any one of us. I actually am looking into being a validator for Ethereum, which means I deposit 32 Ethereum into a smart contract, and now I become one of the people that helps maintain the network. And I do this by installing a piece of software. I'll be honest, I'm not really doing anything. I am installing a piece of software on my computer that will validate transactions. As it sees transactions in the network, it says, where'd that come from? You have the money, it's sending it here, you have the smart key, okay, great, done. And for doing that, I will be rewarded with Ethereum as payment. Now, we don't know yet what the rate of return for being a validator is. I've heard anywhere between 4 and 12%. Right now I have some Ethereum staked making 6%. I will probably become a validator, which I'm going to walk all my CIL students through how to do it manually and do it yourself and earn potentially up to 12%. But the point is, when I go to proof of stake, which has these validators, which I will probably be one, the energy consumption of the Ethereum network will drop by 95%. So it's super energy intensive right now. It'll reduce that significantly. So that is the merge. Now, the merge primarily addresses two things: proof of work versus proof of stake. It's currently proof of work. And the analogy I use in the Monday Morning Must Knows, I'll revisit that one right now because I think it's important and relevant to what we're going to talk about. If you look at the Ethereum network as proof of work, I want you to picture it like a steam locomotive, right? And it's this old, they're beautiful to look at. It's this old-fashioned looking train. I know, it's only started in 2014. It's like, oh, it's so old-fashioned now. That's just 8 years later, it's worth billions of dollars. Anyway, let's call Ethereum currently with proof of work the steam locomotive. And it's going down the track and it's doing 50 miles an hour. Now, here's the deal. Switching from proof of work to proof of stake is very similar, in analogy in my mind, to going from a steam engine to an electric train. It's completely different. It's a totally different operating system, right? All the guts, the internal organs of your train are different. Well, how do you do that when the conditions are that this train cannot stop, it cannot slow down, and the passengers have to never know that anything happened? This is why it's so unbelievable and what's so crazy about this merge that's going to be happening. And I've been doing a lot of talking about this for OTA as well and really preparing for the merge. So what you're going to witness on this Thursday, it's supposed to happen this Thursday, the 15th. It may happen, the 13th, 14th, 15th, 16th, somewhere in there. But right now, the expectations are it'll be on the 15th, which is going to be Thursday. And what they're doing is they're saying we're literally going to switch over from proof of work to proof of stake seamlessly without any problems, and no one will know the difference. Now, you're probably thinking to yourselves, that shouldn't be that hard. You have millions of transactions that all need to move over to that other train and do it flawlessly. Nothing missing, nothing lost, everything's smooth, and everything functions properly. So, what will happen on Thursday is this. It's not that they're going to just automatically flip the switch and it's a brand new network. The parallel chain that's called the beacon chain for Ethereum, it is running proof of stake and it's been running for months. Right? It's been running and it's actually going right now. So it's been running in parallel with the current network. And they've been running all sorts of beta tests. All right, if we change this, what impact does it have? Okay, great, no problems. If we change this, what happens? And they've been, I think, doing a great job. It's going a little slow, but honestly, if something of this magnitude, you can't take the risk of switching and the entire thing comes crashing down. Can you imagine Thursday? If let's just take a look at the Ethereum chart, just because you're probably tired of looking at my ugly mug. Here is the Ethereum chart. Bear with me as I bring it up. ETH. Right, down a little bit today. But here's the Ethereum chart. I think that a lot of what's happened in this down move when we were at $4,800 on Ethereum back in November of last year, a lot of this was market was overbought. A lot of this, especially in here in these big drops, was because of what happened with Terra Luna and UST. But also a lot of this down pressure on Ethereum was, what happens if this fails? What happens if Ethereum cannot pull this off? Does it mean that all of a sudden all of the competitors vault in value? Well, that's the big question. If they fail on this, here's the vertical blue line is when the merge is supposed to happen, just a couple days away. If they fail miserably, you're going to see Ethereum plummet. I mean, it'll go past 800 like a hot knife through butter. It'll be down here in maybe a couple $100 if it fails miserably. Now, I don't believe that's going to happen. I think that the testing has been done. I think they might get a couple small little hiccups, but I believe that if you look at this price chart, it kind of tells you that the optimism is there, right? It's bottomed out. It's starting to make some higher highs and higher lows. You look at some other networks like EOS, which is a direct competitor, all right? Now, EOS has their own fork happening on the 21st, so that's not quite apples to apples comparison, but here's one called Cosmos. Now, all of these layer 1 blockchains with smart contracts, they're all doing really well right now. So I think that the belief is that this is going to go well. And because we've been so beaten up and negative for a long time, I really think that you're going to start to see the crypto markets somewhat bottom out here and start to trend up. And I think the leader will be Ethereum if it all goes smoothly. Yeah, it is. But, and again, Naum says it's a good time to buy the dip. And that's the problem here. I'm certainly not trying to force anybody into buying anything. For me, I am buying crypto. You guys know my stance. I am a 5 to 10 year holder on this. I sold some the other day. I sold some of my Luna tokens when it was up 500%. It was just, it's a shit coin, so it'll probably go to zero. However, Ethereum, I think, has a lot of potential, especially if it starts to gain more mass adoption and become utilized. And if we can get the SEC to call it a commodity, then I think things are great. But the unknown, the uncertainty is still looming over this. So really, I think Thursday and Friday are going to be crazy days for the crypto markets. Now, as the clickbait says here, preparing for the merge. So if you are an Ethereum holder, what should you do? Well, let's go back to my two-train analogy. In the two-train example, I've got the steam locomotive. And let's say that on that steam locomotive, I need to hire there's a bunch of people that work on that train. And we'll call those the guys that shovel the coal into the furnace, right? I know there's probably only one guy, but let's just imagine that there's tens of thousands of them, right? The guy who's shoveling the coal into the furnace, you guys tell me, do you think that he's excited or upset that they're going to go from the steam locomotive to an electric train? When that transition happens in my train analogy, goes from steam engine, which uses coal and shoveling all day those coal to keep that steam engine going, and you move that over to electric train, what happens to that shovelers, the guy shoveling the coal? What happens to his job? He's out. He's done. He's unemployed. And what if he spent money, big money on his shovels, right, and his attire, and whatever the case may be? That's exactly what's happening to the Ethereum network. You have miners that have literally Costco-sized warehouses around the world that are mining Ethereum and making, right now there's 2 Ethereum created every 15 seconds. Well, Ethereum's trading at $1,700. So every 15 seconds, there's $3,400 worth of Ethereum created. And that's all going to snap the fingers, disappear on Thursday. So if I'm a miner who has spent maybe $10 million or even $20,000, or if I'm a huge farm and I have investors and I've spent, let's say, a couple $100 million, I am going to be pissed. There's no way to say it. I'm going to be furious. I'm resisting this as hard as possible. So preparing for the merge, here's why it's critical. Those miners that run the proof of work network, they paid for all this mining equipment. They are going to be really upset. Really upset. However, you now on the new network are going to have validators, and everybody there is happy. So what could happen, and right now I think there's probably like a 95% chance this is going to happen. Ideally, what would have happened in a perfect world is Ethereum would have switched from proof of work to proof of stake, and there have been one chain. That's it. We all followed that one chain, and that's Ethereum. But because these miners are so pissed off and upset and saying basically, you're stealing our livelihood, and we paid good money for this equipment, what's going to happen to those miners, or what the miners are going to do, is they're going to create what's called a hard fork, a contentious hard fork. And what will potentially happen here is you may actually have ETH, which is your Ethereum, and ETHW, which is Ethereum proof of work. And now we have 2 chains that run. So it's really, think of it like a stock split. But instead of getting double the shares, you're getting 2 different coins. One's a proof of work coin, and one's a proof of stake. Now, if you do hold Ethereum and you're keeping it at an exchange like Coinbase or Kraken, most likely they are not going to give you the fork. Meaning when it happens, you'll still have your ETH and everything's fine. But they're not going to give you the coins of that new proof of work network. So, for those who are a little bit more proficient in crypto, you're going to want to move that to a location where you control your private keys. If you control your private keys, then you can go and claim that fork, and essentially, and I hate to use this term, but it's legit, it's free money. Because I'm holding my Ethereum anyway, right? My plan is I'm going to be an Ethereum holder. I like Ethereum. I'm going to hold it for a long time. But now, because I have 60 plus Ethereum, as soon as that forks, I'll have my Ethereum, but I'll also have 60 plus of whatever that new token is. And I don't know what the price of that token is going to be. It might be 5 cents, could be $100, could be $1,000. I simply don't know. What I do know is that when this happened to Bitcoin back in 2017, Bitcoin forked. Now, it didn't change its consensus network. It didn't go from proof of work to proof of stake. It stayed proof of work. However, there was a disagreement in how it should process transactions, how big the blocks should be. And from that, we have Bitcoin and Bitcoin Cash. When that happened, for me personally, that was several $1,000s of free money simply because of the fork. So in preparing, I would encourage you guys to do some research to check and see if your exchanges will be honoring the fork. If they don't, then you might want to move it to someplace you have the private keys. You also have a specific window of time to do that. If you are someone who's using anything to do with the Ethereum network right now, you're probably okay today, probably okay tomorrow, but you should not make any transactions or trades or transfers of anything to do with an Ethereum product the 14th, the 15th, and the 16th. And the reason why that is because all the exchanges, all the networks have to freeze momentarily and upload that new software and convert to the new network. And if you're sending transactions at that time, there may be some problems, and it's just not worth the risk. So highly recommend for anybody who's buying, selling, transferring, doing anything with Ethereum or an ERC20 token, don't do it. Take a couple days off. Just let your crypto sit there. Once you put it in the location that you want, and leave it alone. All right, let me see. I did... Okay, now will Ethereum validators have to do PR and education like the Cardano folks do? No, not really. I'm doing a lot of research in it because I'm a nerd, and I think it's just fascinating what crypto represents and the potential for it long haul. As far as educating what validators do, no one really needs to know. If you believe in Ethereum, then you're buying Ethereum for what it is. I'm looking to be a validator because I really believe in what it is, and I want to be a part of that network and help it out and make some money along the way because I'm going to hold Ethereum anyway. Does the energy demand go away, or is it just shifted to you little guys? The energy demand goes away. The amount of energy to mine a block under proof of stake, I could do it from this computer here. I could probably literally do it from my phone, and that may actually be something I try in the future. It just needs to be something that's connected to the internet 24 hours and run a couple pieces of software. So the demand for energy plummets, and it goes away permanently. It's not like the proof of stake network starts to use more energy as it builds. Doesn't work that way. It's just a normal computer. You're getting away from those ASIC miners. Remember, proof of work is whoever's got the biggest computers wins. So they're getting more and more and more. I mean, literally, I'm not joking. Let me really quickly show you this. See, it's going to blow your mind. Check these pictures out. You just go to Google and type in Bitcoin mining farm and look at images. I mean, look at this thing. That's 3 stories of nothing but mining rigs as far as you can see down there. Mining rigs. I showed you that one right. Mining rigs. These are just floor-to-ceiling mining equipment. When you switch from proof of work to proof of stake, you don't have any of this. I mean, here's a... It's insane. I mean, this one's crazy. Look at rack. There's 1, 2, 3, 4. There's probably 10 or 12 racks that are 8 feet tall, solid mining equipment, right? That is what was using all the power. Now it's going to go to my home PC. It's going to be I have a PC downstairs in my secondary office. It's going to be connected to the internet the whole time using just the minimal energy, a couple hundred watts. Big deal. Each ASIC miner could use anywhere from 1,500 watts to 4,800 watts for one miner, and that's a warehouse full of them. That's the problem. Let's see, what was the question there about will ETC benefit from this? So Ethereum Classic, I think you really have to understand what Ethereum Classic is. Ethereum Classic is a fork of Ethereum. Now, it's still proof of work. So there was an issue that happened, I think, 2015 with Ethereum. There was a hack, and they rolled back the chain to get past that, to undo the hack. However, Ethereum Classic said we want to fork because of this, et cetera, et cetera, et cetera. Ethereum Classic doesn't really have developers. It doesn't really have much people building on Ethereum Classic. So it's kind of slowly dying, which is normally what happens with a fork. My guess is, and this is just my assumption, when we get the fork happening Thursday and it goes ETH and ETHW, right? The new chain, which is proof of stake, and the old chain, which is proof of work. What will happen is there will be a lot of attention around that proof of work blockchain for a couple weeks, a couple months, but developers will move away from it. It will start to dissipate, in my opinion, and become something like Ethereum Classic, which will just continue to lose value over time. So when this fork happens, the moment that I receive my free tokens for the fork, I'm going to be selling those right away. Just make whatever money I can. I'll let you know. I'll tell you, see how much I make on that one. But that's it. Ethereum Classic will benefit because it's going to get the miners. So some miners are already going to move over to Ethereum Classic and continue to use proof of work. However, you guys also have to understand that there is a heavy government push to reduce proof of work networks. They're talking about potentially banning proof of work, which I don't know how that's going to work, but what that could do is seriously hinder things like Bitcoin, right? Now, it would be kind of silly. Bitcoin would still function. It would still be there. It just we won't have the big mining farms here in the U.S. But that's a topic for another day. Ethereum Classic, not Litecoin. Let's see, Chase. Do you think this sets up another other L1s to steal market share? Also, can you speak to coins like Raven Coin and Litecoin that seem to be popping up, knowing they're popular miners? Sure. So, Litecoin, LTC, Ethereum Classic, Raven. These are very popular mining cryptocurrencies, proof of work mining cryptocurrencies. It's certainly what you'll get is some of the Ethereum crowd will be moving over to those areas because they have equipment that might be utilized that way. So, for example, an ASIC miner, which is ASIC, those are tailored to one specific crypto. They'd have to be retailored, not manufactured, but reconfigured, which could be very expensive too. I don't know. You also have NVIDIA cards, right? People are using their video cards to mine cryptocurrencies, and that may move from Ethereum to some of these other ones. So they could gain some popularity, but I believe personally you have to step back and look at the big picture and look. For me, the grand spectrum says, I think proof of work is done. I don't see anybody stepping up and dominating the proof of work. I think it's actually going to get a lot of pressure from regulators, from energy consumption. I think Bitcoin will survive. I think Bitcoin will be pretty much it on the proof of work front. Everything else will move over to proof of stake or some derivative of proof of stake, like delegated proof of stake, or maybe even there's some newer technologies called directed acyclic graphs or DAGs or tangles and things like that. These are some new kind of blockchain technologies that are faster, more efficient, and it's so new. We're witnessing this evolution of the technology. And I mentioned at the top of the show, I've got Generation 1 is Bitcoin, Generation 2 is Ethereum, Generation 3 is EOS and Cardano and Solana. We don't know what Generation 4 is yet. I'm looking forward to what it is, but we keep learning more and more as we progress. I say we like I'm a developer, but as this industry grows, there'll be another generation and it'll have some improvements on it. It's kind of like taking the first car we had. It was a piece of junk. What do? We learned from that. Okay, well, this is a problem. Let's fix that. This is a problem. The next thing you know, you've got yourself, Lamborghinis and Ferraris that are just supercars, or Teslas, right? We keep learning from innovation. And if we thwart innovation, if we go after it with regulatory pressure, then I think we miss the boat. It's saying, okay, let's take this technology and make it better and more efficient, whether it's energy efficient or cost efficient, and then build from there. So preparing for that merge, guys. Anybody who has Ethereum and you want to keep your Ethereum, great. You can keep it where it's at. If you're not worried about anything, just leave it where it's at. No big deal. If you're like me and want to get the fork, you have to move to a place where you have your private keys or a location that will handle the fork for you. There were a few other things though. Any questions on that? Why haven't we seen spot ETFs in the U.S.? Because our government, Alan, is a bunch of scared POSs that are manipulated by major financial firms. You guys know you have BITO and BitF that are a couple different futures ETFs that you can utilize. They're afraid to make a spot ETF for Bitcoin. And unfortunately, they shouldn't be afraid to do that, right? That ETF would actually be better than the futures one, because in the futures one, there's so many hidden costs and all this weird stuff. I will never trade the Bitcoin futures ETF BITO. It just doesn't make any sense. And I don't believe you should trade it either. Once we get a spot Bitcoin ETF, well, personally, I think one of the reasons it hasn't happened is a lot of pressure from the major firms who have the futures ETFs, right? They're lobbying against it. Oh, it's too risky, it's too dangerous, blah, 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 blah. But that's the main reason. And other countries already have spot ETFs. We just don't, which is stupid. Bitcoin Cash was getting traction initially, then dropped. Yep, initially when Bitcoin Cash forked, it was looking real good. And then you realize what it is, just a money grab by a bunch of venture capitalists, right? There was no real improvement on the Bitcoin Cash fork. It was a little bit faster, block time's a little bit faster, but it really isn't that big of a deal. It's like Litecoin, essentially. Think Grayscale wins their lawsuit against the SEC? I don't think that Grayscale wins their lawsuit against the SEC simply because the SEC is a government agency. So I don't think the government's going to be like, yeah, we'll hit one against their own. I think they'll find some technicality out of it. Should they win? Yes. The SEC alleges that the SEC is dragging their feet and not giving specific nods of proof. They keep giving them all the hurdles to go through, and Grayscale's like, okay, we've done this, now what? And they keep dogging them. So I think that the Grayscale should win it, but there'll be some technicality that gets the SEC off. How do I stake with Merlin? I don't know yet, Joe, but if I get to that point, I'll let you know. There's a lot of things you need to consider when you're looking at staking cryptocurrencies, the trustworthiness of who you're staking with, and I have no intent of taking anybody's money. Actually, I kind of want to do it just myself. Like, I don't want to bring anybody in if something should happen. I don't want to bring anything in, but I'll let you know. What does this mean for the miners, Chase? Great one. Again, the miners are dead. They're dead in the water. As of Thursday, when this switch happens, if you're a miner of Ethereum, you got nothing to do. You're unemployed, which is why they're going to do that hard fork and try to keep that network alive. But I'll tell you what, most people out there are looking at the hard fork and going, not going to happen. ETHW will probably disappear. Over time, it'll probably go away. From most of my research points to the fact almost nobody is saying they will support the ETHW fork, which means it's destined to fail. So if you do get some in your account because you have it in the right places, immediately sell that thing. I don't think it'll survive. Any thoughts on XRP? Sure. I'm not a fan. Anybody who talks to me knows in 2016, 17, I was a pretty big Ripple fan, big time. Then what happened with the SEC made me kind of walk away from it. I still hold a lot of Ripple, but I will not buy any more. There's no need for me to. I think that while Ripple has been embroiled in this lawsuit with the Securities and Exchange Commission, that you have things like Stellar Lumen that have stepped up and said, okay, well, you're hogtied right now. We're going to do what you wanted to do. And now they're doing, cross-border payment channels. So I would look more at Stellar Lumens than I would Ripple. Now, that said, if we look over here at the chart, we'll look at both of those real quick. So here's XRP, which is Ripple, right? That's dead. I mean, look, flatline. You're flatline at 35 cents. I'm kicking myself for not getting that at $2 and higher. But here you have Stellar Lumens, which is also flatlined. So it's definitely not doing very well, but they are still functioning and working and making cross-border payments. I don't see Ripple really doing much right now. Bitcoin dominance going to head north now. BTC. I don't know if it's Bitcoin dominance going to head north. I think what you're going to see is actually Ethereum take a little bit of that market share away from Bitcoin. I mean, you can see the price chart right now on Bitcoin. It's still pretty ugly. When we came back down to these recent lows last week and 2 weeks ago, I bought some more Bitcoin. I also bought some more Ethereum. I do feel like we could go down, right? 10,000 was kind of my target. I had 13.5 and 10,000 as targets if we broke these lows of 18,000, which we have not. So that's still real positive. And again, I think for me, it really boils down to what happens with Ethereum. I think that this is absolutely the dog that wags the tail. If this fails miserably on Thursday, you're going to hear people screaming as this market falls apart. I think it's a bad thing if they fail. If they succeed, then I think it'll really start to take off. Now, one thing to understand is when Ethereum switches from proof of work to proof of stake, it doesn't make it any faster. There's no speed upgrade. It's not faster block times. It doesn't handle more transactions. Does none of that. It only saves on the energy consumption, which gets it out of the spotlight of regulators. Over the coming months into 2023, what they're talking about is a series of 2 upgrades. One upgrade will allow it to do what are called roll-ups. And roll-ups are where you can batch transactions, and that should give a 100x to its transaction capability, meaning Ethereum could go from 15 transactions per second to 1,500 transactions per second. That is pretty cool. Now, all of a sudden, you can handle a lot more. And then they're going to do something in 2023, is the proposal, that's called Sharding. I will enunciate that very well. Sharding, get your minds out of the gutter. And with Sharding, it allows them another 100x. So now you go from 15 transactions per second to 1,500 transactions per second to 150,000 transactions per second. If you get that kind of scalability with Ethereum, then there's no need for competition. They're the lead dog. So that'll be interesting to see what happens. But again, that's down the road. We got to take one thing at a time. But it all boils around to preparing for that merge. If you're someone who's really freaked out and think it's going to fail, you might want to get out of your Ethereum. If you are somebody who just wants to hold Ethereum for the long haul, then great, keep in your account. I'll leave you with these 2 little parting pieces here on it because I've gone kind of long on this Ethereum topic. For anybody who's holding crypto right now, it doesn't matter what's Ethereum, Bitcoin, Litecoin, doesn't matter. If you're holding cryptocurrency and somebody calls you up and is like, hey, listen, the fork for Ethereum is going to happen. You're going to have to move to claim and do this. Don't fall for any of this crap. There are more scams right now than I've ever seen in the crypto space, whether they're emailing you, trying to spoof you to give them some private key information so they can steal your crypto, whether they're trying to get you to move it to a specific address to claim your new Ethereum. You don't have to do anything. If you want the new Ethereum, just stay where it's at. Just hold it. And as of Thursday, it will still be the same Ethereum. It's just operating differently. There's nothing you need to do. With ETH fork, won't graphic cards get cheaper due to the supply flooding the market as they can't mine ETH anymore? Yes. And that's an interesting point you bring up because I had this discussion with Larry. If you look at NVIDIA, NVIDIA's really been taking a dive here lately. Now, I know that NVIDIA is not exclusively mining equipment. I know that. But a lot of people are using Ethereum or NVIDIA video cards to mine cryptocurrency, particularly Ethereum. I have a couple friends that are doing it. And I do think that that'll take some of the pressure off here of on the price of video cards. I know that there's been people doing black market video card sales and making tons of money. Question is, what does that do to NVIDIA? If there's a flood of these video cards now, does that make this even worse? And we start looking back to some of these lows we saw, at 115 or maybe even lower than that. So it definitely could put pressure on stocks like Ethereum or NVIDIA and some of these mining companies. If you are looking at things like Mara or Riot Blockchain, I would definitely dig into those. I'm not holding any of them, so I'm not looking into it. But if you are holding those, look into them and see, are they mainly Ethereum miners? Are they Bitcoin miners? What are they mining exactly? You have Riot, right? Another big mining one. They've kind of stabilized here recently, but if they're heavy into Ethereum, they're going to have some problems going forward. Something wrong with USDC that Binance is receding support. No, it's a power grab. I'll tell you this, in the next year or two, stablecoins will probably be one of the most important financial assets in the world. It sounds nuts, but a stablecoin like USDC or Tether or Binance USD or some of these other ones will be the most important tradable security on the face of the planet. Because it's instant, it allows you to just real quickly move from market to market, to exchange to exchange. That's the real power here, I believe, is stablecoins. And right now we have a lot of issue. We have a huge issue with how stablecoins are constructed. We saw, I don't even think I have the chart anymore. I think it's completely gone. Yeah, UST chart is now officially gone. But you have the UST chart, which basically went to zero. You have Tether, which is backed by all kinds of commercial debt. So, what is making up a stablecoin? That's the big issue that legislators will have to figure out next year. I think you'll probably get it by the end of next year, is real clarity on that. But Binance is making a power move with that. Basically, Binance said any crypto, any stablecoins that come in other than Tether will get converted into Binance's stablecoin, which is BUSD. It's a power grab, big time. It's really, really interesting to see that change there. What do you see as the worst case scenario for the major markets if the merge has a big problem? Good question, Tom. Are you referencing the equity markets or are you talking crypto markets? If it's crypto markets, what I think will happen is, so let's say hypothetically tomorrow on Thursday we hear about the Ethereum network crashed, it was down, they had to do a rollback, they're going back to proof of work, it was a miserable failure, right? If that happens, then I would look at buying some other ones like Atom, Avalanche, or Solana. Cosmos is probably one of my favorite ones out there. That's Atom. EOS as well. Now they have a fork coming up in 2 weeks, but EOS is another one that I'm bullish on right now. As far as the broad equity markets, okay, good. Glad to ask for that clarity. As far as the broad equity markets, I don't know if it'll have too much of an impact. I think it'll probably have a sympathy sell-off. Like if you saw the whole crypto market really implode, I think you'd see the equity market sell off too, which is kind of like just a shock factor fear. But I don't think long-term it'll really have much of an impact on the broader equity markets. All right, I think I got most of it out there. Do equity markets understand what's coming with quantitative tightening? Well, it's been happening. I mean, sure, equity markets understand, but, it's that old don't fight the Fed adage. If you look what happened out there today, and thank you for the segue, let's jump right into that and talk about our markets today. Let's start at the bottom, work our way up here. Gold had a nice day, which is great. I still have, it's funny, I have Friday put options I have that are expiring at 160, 150, and it's just dancing right around that number, so hopefully I will... either way, if I get gold at 160, 150, I already collected a ton of premium on those puts. But gold up 0.69% as of right now. 1740 is where it's trading at. Again, I've got this line at 1752, which it looks like it came real close to today. My guess is by Friday we'll probably see it come up to that 1752 mark. But that was your weakest performer. From there we go up. We got the Dow 0.72%. That continued on very nicely. Broke through this little high we had back on August 28th and 29th and 30th. S&P, same. I'm holding on to my S&P. I closed out my NASDAQ calls today just because I was up over 50%, and I'm like, you know what? I still feel like some of the others here that basically feel that we're going to have a second half of September sell-off into October. I do kind of think that as well. So I just lightened my long position. I unloaded my Qs, but I'll show you that chart in a second. I'm still holding the S&P because I do think it was hit this 1160 mark here. Or sorry, 4160 mark that I have on those S&P futures. We're at 4130 right now, so another 1% tomorrow, and I will get out of my S&P as well if we get there. Crude oil up 1.14%. This is still an ugly downtrend, so nothing trend-worthy wise. Here's the NASDAQ. I don't know. I just felt like tech has had such a huge run. I wanted to get out of my NASDAQ, so I closed out my call options there. Again, it was over 50% for a 4-day or 5-day trade. I'll take that any day. Russell 2000 was 1.25% move up. I don't have any Russell exposure right now, but definitely that right where that yellow box is, I guess I could modify it because that's not exactly a supply zone. We could do something like this. Right, that is where I think you're headed for the Russell 2000 if we continue on with momentum. And the big piece right here is Bitcoin. Bitcoin's had that huge 2-day pop. This is the Bitcoin futures, but I can show you on the spot market, which is way better. Right, it's been 4 days in a row of just nice gains, moving to the upside. Now the question is, do we get to 25,000 and break 25? If that happens, we're back at 30 in no time. And I think if this lines up with that Ethereum merge, I really think that a lot of the pessimism and uncertainty is what happens with this merge, right? Nothing like this has ever been done. We've never had the steam locomotive going to an electric train in the snap of a finger. That's kind of crazy, and I think people really are excited about it and also fearful. I'm mining Pi. Do you have any insight? So no, if I remember correctly, that's like an app on your phone, right, Paul? From everything that I've seen, Pi looks like a MLM, like a multi-level marketing thing. The more people you bring in, the more money you make, but there's not like huge prospects for the application. But I did research it a while back, but I haven't really looked at it much. But no, I don't mine it. You're not really mining anything. Just to understand, when you mine something, you are actually using computational power to solve puzzles and earn rewards. What Pi does, you're not mining. What you're doing is you are keeping an application running, and they pre-mine everything. They have just a big, huge bucket of Pi tokens, and because you keep this thing running, they give you a little drip out of it. Drip, drip, give you some. So you're not mining anything. It's not like you're using computational power on that Pi network. When I looked at it, it was not that way. So I moved away from it. there's a lot of gimmicky little MLM, multi-level marketing type pieces where you bring in more people, you earn more pie, and the longer you're on it, the more we're going to give you. They're just using that for leverage because they can say, look how many active users we have, look how long we're on, and basically they're paying you to be a part of that. So, no, not for me. Chase says, I don't know how these markets are so resilient. If we didn't have those commodity prices falling like they have for the past couple of months, although they're actually rising now, let me go to some commodity markets here for you. If we didn't have these commodity prices fall so much, I would still be very bearish. But now you're starting to see stabilization, right? These big declines here we saw from March all the way through August, that factored into the deflationary aspect of it. Here's your soybeans, right? Natural gas. Now, natural gas is still relatively high, but it's definitely off of its highs. Corn starting to rally back up. So remember, this decline here, that's what's been pricing into the CPI numbers, which come out tomorrow. Well, if we all of a sudden we start to see these numbers tick up again, that means inflation is starting to move back up. And as Chase says, and if CPI is hot again, down we go. Not necessarily. If CPI goes up, yes, I do believe that the markets would be poised to go down, but it really is what does it do to the Fed's decision on the 21st, which is going to happen not this week, but the following week, where they are going to make their rate announcement. And right now, the odds are shifting every day to a 75 basis point. It would not surprise me if tomorrow's CPI number comes out much hotter than expected to see the expectation of a full 1 point. Right now, there's a 92% probability. You can see it right here. This is the Fed Funds Futures. A 92% probability that we're going to get a 75 basis point increase. So my sticking to my guns and saying 50 basis points, I may lose this one. I may lose that one. But if this CPI number comes out tomorrow, which here it is, they're expecting it. Let me just focus on today, or sorry, tomorrow. So here's Tuesday's data. You can see right here the CPI. They're expecting it to be negative, which would be huge. I mean, a contraction in inflation, meaning deflation for the month, which would be crazy. And I don't know. I don't know which way it's going to go. If this ends up being positive number, meaning more than a negative number, then that could really shift the argument that the Fed might actually go a full point. And we'll have to wait and see after tomorrow. By the time we do the show tomorrow, we'll look at this and see what those numbers have updated to. I think speculation is now starting to circle that they're going to jump to 1%, a full 1 point. But I don't think they will. I thought 50 basis points, but talk about 75 again. Is this Groundhog Day? Yeah. Yep, it is, Tom. I mean, remember that chart I showed you guys, which I thought was a really powerful one, that showed the rate of inflation historically, and the Fed funds rate was always higher than it. Almost always. And now all of a sudden inflation is so much higher than the Fed funds rate. I think you got to go back to normal. We got to get back to that point where Fed funds is above inflation. Do we see the Fed funds rate get to 8%? Oh, you want to talk about a down market? That's going to choke the economy, but right now, you just have to play it for what it is. I mean, we look at these markets, and they're looking real strong. I was fortunate enough to close out my puts at a demand zone. So I had puts in this sell-off down here. As we came to this demand zone, I closed those and bought some calls. I had one day where I was sweating a little bit. We got negative. Luckily, caught this nice little bounce up. But, who knows where this thing is going, man. It's so uncertain. The data and all the macroeconomic stuff tells me we're going down. But then you look at some of the charts, and going back to June, it looks like we're going up. That's crazy. Now, all right, let me answer a couple real quick questions here. I got to go through this one real quick because Skilled Stocksman is one of our regulars, but it's great. He says, I do remember you saying the previous 2 weeks were not very good for you, and I think last week you said it was so bad that you didn't deserve to have a whiskey. Well, if I have losing weeks, I don't deserve to have a whiskey, period. But you're right. I mean, it was okay. It wasn't like horrifically, but it's not like I had a gigantic drawdown. I just don't like losing, especially at the end of a week. I'm fine losing a couple days a week, but at the end, you really want to have a positive number. And unfortunately, the previous 2 weeks didn't, but last week was absolutely fantastic. So I thought this would be fun because I think this is a lesson in discipline and rules. He says, but did you follow and stick to your rules? And a couple of bad weeks of losses just happened? Or did you break your rules and the bad stuff happened? If you followed your rules, then you should have your whiskey glass. If you broke your rules, I agree. No more weekend whiskey wrap-up. See what your instruction has done to me. I love it, Skilled. You're right. I didn't violate any rules. I did not violate any rules, and I I did exactly what I should have done with regards to stop losses and took losses. And unfortunately, lost more than I wanted to overall, but it is what it is. But I didn't have anything that was a devastating loss. So you're right. I should have had my whiskey on Friday. I actually forgot the whiskey on Friday. Last part here for Naum, who I think is in the room today. Naum says, would options trading be good for stocks that pay a dividend because the range is pretty much in a range and not volatile? Yeah, sure. But remember, when something is in a range, it's priced into the implied volatility of that security. So, if you're trading options on Tesla, it's not range bound, real volatile, right? So as you're trading those, you're going to get a lot more premium if you're a seller. You're going to have to pay a lot more premium if you're a buyer. Of course, market timing plays into this. If you're in something that's, let's say a slow-moving equity that pays a good dividend, ExxonMobil, right? Yeah, if you find that nice range, great for trading options, but you're not going to get the amount of premium that you may normally get from something that's more volatile. So you go for the safety and security and predictability of a sideways kind of slow ranging move and you don't make a lot of money, or do you go for a little more unpredictability and try to earn more? That's just a decision that people have to make. But sure, if you find something that's range bound, go for it. I think that's a great way to go. All right, Michael, I had a question from you, but I got to wrap it up here just because I'm getting near the end of the show. I'll address your question tomorrow, talking about bucket shops and Fibonacci levels. And you also, it was interesting, it sounded like you thought you offended me somehow in something you said in chat. I don't think so, my friend. You did not offend me in any way. I don't think anybody here has really offended me. And here's how you know you've offended me. If you offend me, I'm probably just going to mute you on chat and you'll never see your stuff show up anymore. But I haven't done that to anybody except the porn scammers that are always trying to update, to comment on my feed, but we won't do that. All right, as far as tomorrow goes, let's look at that economic calendar one last time here, and then we'll wrap up for the day. Here is what we've got cooking for tomorrow. Again, CPI is what it's all about. That's going to be 1 hour before markets open. All the times you see here are Eastern Standard Time. I normally make those Pacific, but just guess I'm doing Eastern Standard. For the U.S., that's pretty much it. Is the CPI, you also the TIP IBD economic optimism numbers. You have the federal budget balance, which we can all laugh about. 30-year bond auction as well. And really not much more than that. And you do see here the German ZEW economic sentiment report. That's a pretty big one. And they're expecting it to get worse and worse and worse. Now, of course, over the past 3 days, we've seen a little bit of a pop back up in that euro, but I don't think we're out of the woods yet. We do have a rate announcement coming up here in the next couple days on the euro with their main refinance rate, but all in all, a pretty ugly downtrend going on for that euro, which I'm stoked on. Now, some people are asking about my time off here. Yeah, I will be leaving basically October 1st. I think I'm back I might even be back on Friday the 14th, but it's going to be 2 weeks where I'm gone. And this Thursday, I have to take off as well for an Online Trading Academy event, a corporate event back at corporate. So no show this Thursday, but we'll be doing, I'll be doing a Tuesday, Wednesday, and a Friday show. So just making sure we got all that covered. Awesome. Excellent. Well, you guys asked a bunch of great questions. If you do have questions, send them into the YouTube channel. That's the best way. Put them down below the videos. I appreciate when you guys comment on those, whether you liked it or didn't like it. That's great, too. For those of you, I haven't really gotten any hate mail lately, but I don't mind hate mail as long as there's some constructive criticism behind it. So if you say you don't like something, that's fine. You don't have to agree with everything I say, but offer solutions or ways to improve things. I always like that too. So you can always comment at any YouTube video. I can see all of them that come in on any of the videos. Also, you can email me at TraderMerlin@gmail.com so I can get any of those questions ready on the show. As Margaret says, what about guests? Working on it. I reached out to a couple people that postponed and said, hey, I got to wait a couple weeks because of some things that are going on. And that may actually get me one, maybe two guests this week, but I'm not going to let you know what that is yet. I'm working on it. So that's it, everybody. Hope you have a fantastic remainder of your day. I hope that you learned a little bit about Ethereum, cryptocurrency, the history of it. It's something for me that I'll say it. I'm enamored with the technology. I think it's fantastic what it might do for us as a civilization, not just trading, but as a civilization tool. Someone asked me about Cardano. Cardano has incredible potential, and the team behind it is saying, look, we're not here to make money. We're here to change the world. And that's the kind of project I want to get behind, and maybe at a later date I can talk about some of the changes that are coming to the world because of these technologies. But we'll save that for a show that doesn't go over 1 hour. Thanks, everybody. Have a fantastic remainder of your day. I'll see you tomorrow. Take care.